All right, so we're back. It's Rich with Spokane Home Guy Group, and
Mike Hogan with Chimney Rock Mortgage.
in this video we're going to try and complete each other's sentences the whole time, so be on the lookout for that. I missed last month because I was busy watching the 49ers beat the Seahawks. It was
They
my
did
daughter's
actually
first
win.
game, so that was a really fun time. So, but we're not
But your
here.
daughter is a Seahawks fan.
Yeah, my daughter is a Seahawks fan. That's the unfortunate thing. But we're not here to talk about my wins. We're going to talk about some real estate, talk about interest rates, the Fed, the election, and then toward the end of the video, we've got a special guest in one of our agents from Spokane Home Guy Group, so we're going to introduce you to her. But let's jump into the October real estate market. For median home prices, we actually saw those up almost 1% month over month. And year over year, they're up 6.7%. So the median sale price in Spokane right now, or in Spokane greater area, is $439,000, which is fantastic. The average sale price last month was $484,000. That was up 1.1% month over month, and up over 8.2% year over year. So still seeing decent price growth regardless of interest rates. We saw pending home sales increase month over month and year over year, so activity is strong. New inventory came on, was up 20% year over year for the new inventory, down month over month a little bit, but we're starting to see some new homes come onto the market and give people more choice for homes. So it's kind of nice to see activity steady. And
Well, I think one of the things that probably helped in October was interest rates did get much better in the first few weeks of October. They started to slip a little bit as anticipation of the election and the Federal Reserve things that happened this week. So I think that really helped October. And even though rates aren't quite as good as they were, say, 2 or 3 weeks ago, they're still better than they were 3 or 4 months ago, which certainly helps buyers.
yeah, and I mean, we talk all the time, and so, a buyer entering into our market, now, or buyers that are in the market, like, what can they expect from rates, and what can they expect just in general? I mean, buying, and eventually, at some point in time, you're going to have to lock the rate. So, what can a buyer expect?
Well, I think, what the advice I would give now is if you are working with us, I would suggest you lock your rate. If interest rates were to improve enough, we would float you down to that market rate. There's just so much volatility. The election happened on Tuesday. The initial reaction was interest rates got worse yesterday. They got better today. The net result of that is basically they're equal to what they were Monday or Tuesday when everybody started voting. And then the Federal Reserve Bank, as we know, they meet every couple months to determine their overnight rate, which does have a direct effect on interest rates for cars and credit cards and those sorts of things. September, they had lowered it 50 basis points. Today, they announced a reduction of 25 basis points. So what that will do to long-term rates or mortgage-backed securities is it's showing that the Federal Reserve Bank thinks inflation is coming down. And inflation is not the fan of long-term lower mortgage rates.
Yeah. So, just an actual example is I have a client that's actively looking in the market, kind of floating between two lenders right now. You locked him sub 7, and
True.
So had we not done that and taken the risk of floating the rate, we'd be up over 7% right now.
We would. Interest rates are higher, and that was a lock that we did just last week. So
yeah.
Hopefully, the bond market continues to rally. I like lower interest rates, and we can float them down.
Yeah. So if you're out there looking or thinking about looking, interest rates are what they are right now. It's really hard to determine whether or not you're going to see them decline on a big scale or large enough to really make an impact on the mortgage payment. So if you're actively looking and you found a house, maybe probably best just to go ahead and lock rate. And if you get a pretty big decline, lock in that lower rate by floating it down, but protect yourself because it's so volatile right now.
It's so volatile, and it's kind of like, I've always said, if you listen to a pilot will tell you they'd much rather be on the ground wishing they were in a plane than in the plane wishing they were on the ground. And right now, I think you want to make sure you're locked in because you don't want to wake up and 2 days from now the rates are up a quarter point.
Yeah. Awesome.
And that's how much volatility we were having.
Yeah. What do you think the impact of the new political party coming in, or I shouldn't say new, but like the new party coming in, and how might that impact, housing prices, interest rates? Do you have any insight on that?
Well, as I mentioned, inflation is bad for long-term rates. Some of the things the new administration is considering, tariffs would definitely increase prices, which is inflationary in general, if they really truly go through with that. So that could have a negative impact on rates. In my opinion, I think that was already priced in. I had a friend of mine ask me last week what you thought was going to happen in the election, and I said, I think Donald Trump's going to win. And he said, why? I said, because the financial markets are reacting this week just like they acted the week after he was elected in 2016. So I think a lot of that volatility is priced in.
Yeah. I mean, and we've talked about it, like we're in a buy the rumor, sell the news market. And what we mean by that is take action based on what people think is going to happen versus waiting until it actually happens, because like the 50 basis points or 0.5% decline in rates that the Fed did on their last rate cut cycle didn't have any positive impact on interest rates. It was already baked into the rate.
Actually,
the market already anticipated.
Yeah, rates might have actually got worse a little bit that week. What they did get better is when the inflation numbers started coming out, that we're getting closer and closer to the Federal Reserve's ideal, which is 2% inflation on an annual basis. So that's what helped with rates.
Yeah, and going into next year, there's speculation, maybe some forecasting that the Fed's going to decrease rates by 1% over the course of the year. That's rumor right now. Obviously, it hasn't happened. At some point in time, you're going to have a window, in the first quarter or something along those lines, where rates are going to react to what they may do. And that's probably the time to lock in a rate or take action, as impossible as it is to time anything in the market.
Without question.
Yeah. So let's talk a little bit about a product that, I mean, to be honest with you, I'm not even familiar with it. So this is a good learning opportunity for me as well. But
so, I mean, typically when you're working with us, we're really concerned about debt to income ratios, so we want income. However, there is a product out there called asset depletion, which basically says we'll look at your assets and how fast would it cost you if you spent your assets over a period of time to make that house payment. So one of the shortest one is 84 months. So quick numbers of an example, if you wanted to go buy, say, a second home that you were going to live in, say, 3-4 months a year, but then you were going to VRBO or Airbnb it the rest of the time, you couldn't use a DSCR loan because that is only for investors, but you could use an asset depletion. And even if the house payment was as much as $5,000 a month, you would only need $420,000 in assets, and you could buy a house, you could rent it out, and that's a product. You can use that for primary, you can use it for investment, you can also use it for second home. The one thing I think is exciting about the second home is, this place where you could ski out of it, or you could go to the lake, and then you could also rent it out from time to time to help you make that payment. But you wouldn't have to prove income.
Yeah. So I mean, if so somebody retired or maybe earns an income a less traditional way, writes off all of their income or something like that to not have a large tax bill, asset depletion might be like an option for them.
Yeah, it's a way to qualify. It's not saying you have to take the money out of that asset. We're just qualifying you on that asset.
Awesome. Well, if you know of anyone that's looking to buy, sell, or invest in real estate, love to the opportunity to connect with you or connect with one of our agents through SpokaneHomeGuy.com or 509-990-SOLD.
We'd love to help you get a loan on that. You can go to ChimneyRockMortgage.com or 509-747-1300.
Perfect. Right. So welcome everyone. It's Rich again with Spokane Home Guy Group, and I'm joined with Allison Aahl, also with the Spokane Home Guy Group. And we are going to start spotlighting our agents in the coming monthly newsletters. So we figured we'd start at the top of the alphabet, and introduce you to Allison. So Allison's been with us for a little over a year now, working with buyers and sellers and pretty much everyone in between. So where are you from? How long have you been in Spokane? What do you enjoy doing?
Thanks for having me. Glad to be here.
Yeah.
I grew up in Seattle, actually. I was there for about 20 years. I've been in Spokane about 9 years now. And I bought my house in 2021. So that's really what sparked my interest in real estate. I was a barista for about 9 years before that. Loved getting to know people in Spokane and build a lot of good relationships in Spokane. So my passion, I think I would say for now, is first-time home buyers, just because I was a first-time home buyer. So just getting my foot into it and happy to be a part of this awesome team.
And I will say, it's probably taken you a little bit to drag me along, but in all honesty, just like you have the ability to go into a house, make it aesthetically pleasing, like a really good eye for setting it up well to come onto the market. I know you've done a ton of projects at your own home,
Yeah.
which have been great.
Absolutely.
And so I think like the first-time home buyer stuff and just, you know, some projects getting the house ready to come onto the
Sure.
market makes it all look really good.
I love DIY, and I'm looking forward to learning from your guys' flips and your new construction. And I love anything aesthetic and making something go from ugly to beautiful.
Very active on social as well. So
Yep.
where might somebody follow you to get some of those tips and just see what you're up to?
Sure. I'm primarily on Instagram, Allison Aahl Real Estate. I'm on Facebook as well, but I post tips, DIY, personal life, things about the team on there. So try to be as active as I can be.
And is that the best way to contact you, or how might somebody contact you?
Yeah, you can shoot me a DM if you have any questions about what I post, or my number is 425, still have the Seattle area code, 425-679-1621.
Awesome, thank you. Well, you guys, I hope you tune in for next month's Agent Spotlight. We'll be introducing an agent every month with our monthly newsletter and market updates. So I appreciate you guys tuning in.